Note?
Yeah, 10-year Treasury note. And uh, I think it's bounced a little bit since I created these charts and it's up above 108. It's still very
It's
much,
108.23 as we speak.
yeah, so it's up in this area here. Uh, but it does look like, in my guess is we're still trending lower. Looking at the yearly PL dots, the live dot is starting to swing a little bit, but it's awful early in the year to get excited about that. The quarterly PL dots, nice tight line pushing down, breaking through quarterly envelope bottom and pushing down towards, there's the yearly or the quarterly 5-1 up. And there really isn't a yearly support other than the nearby and the 1-1 zone for the yearly chart. So next target is down here a little bit below 107 on the quarterly chart. And you can see that on the monthly here. And then next month it's even lower down. So I still see a lot of weakness on this and expect prices to continue down. And at some point, if the Nasdaq, if it pukes, the stock markets puke, and the economy rolls over, they'll probably start cutting rates again. So then that might be where the bond rally starts.
Uh, should I comment? Are you
Yeah,
ready?
yeah. You,
Well, let's see if I can show you one of my magic charts again. It's actually the same chart, but it shows things that I want. Okay, what we got here is the 10-year note, right? Now, this is the exact opposite of Bitcoin in the sense of the size of the market. This is one of the biggest markets in the world. And it is, this market doesn't get pushed around. It does what it does. And also, it's been around for a long time. So interestingly enough, on this yearly chart, look what I got. I got 5-year overlays. So that blue line there, that's a 5-year PL dot. Dig that. And so what do we see? Well, the 5-year trend has been up. That's no surprise. And consequently, we're just down to at the level of the 5-year PL dot. What do we expect in a trend up? Well, conventionally speaking, we'd say the 5-year PL dot would hold, right?
yeah,
So, and last month that was true. That did hold. That did hold. You could say this is an exhaust down. The nearby held. It came up and retraced. It's testing down again, right in here. You see now we've created it for ourselves a little yearly downtrend on moving over to the quarterly chart. But that yearly downtrend is starting to turn, Now we happen to be at the bottom end of that little move, so it's a little, it's a question of credibility. Is it going to hold or not? I believe it will because look at this. Look at this. Look at this bunching of 5.9s. The 5.9s are up a little higher, but they're bunching, and tons of 5.9s. We got tons of 5.9 extensions here, right? And when you see support bunching over a bunch of bars, a bunch of time, it's compelling. You got to pay attention to that. If we were to believe the 5-year chart, we would say that we're going to be in congestion, and this is going to be the range for the next 5 years. And this year, the yearly chart is going to play that out. So we're going to get bar, bar, bar like that. Is that going to happen? I don't know. The Fed is a big player in this, obviously. The nature of the economy, there's a lot of unknowns, more unknowns than usual because of the change in the administration and the new philosophy that's coming on board. We see that in the monthly chart with the quarterly overlay. This is the quarterly overlay, right? what we have is the quarterly overlay going sideways. The quarterly envelope's going sideways, right? What do we know about sideways envelopes? The market trades from the envelope bottom to the envelope top, right? Because it's basically a kind of a congestion. And what do we have on the quarterly chart? Congestion. There's one close, there's another close, there's, on the other opposite side is congestion action trading, right? Well, if that's the case, then the next move here is up. How far? This far. By theory, right? So that's your range for the quarterly if this idea holds. You know, if your theory holds. Now, what would lend you to believe that's the case? Well, we have a collection of support here, and the monthly bar so far, halfway through the month, has closed up strongly. So it's got to encounter this baby here, which is pushing it down. But you have the higher time period setting up. You have the higher time period setting up. You have the higher time period, the 5-year guy setting up. So in theory, that's what's going to happen. And we're beginning to see some signs of it, although the monthly PL dot has not yet reacted. You could say that there is the slightest hint of dot swinging here, but really that's just kind of like mental masturbation. Is so slight it doesn't mean much. So that's all I got.
Yeah, yeah. I think the idea of a 5-year PL dot refresh would be a nice trade.
Well, it is. You know, look at what happened here on the 5-year chart. We only get this much. There's only one 5-year bar here because of the limitations on the data. You have to go way back in your back data to have more. But if you think of that as a conventional situation, you have an exhaust at the top, a 5-year exhaust at the top, probably up in the top of zone 5, I would say. Like this would be the top of zone 5 of the 5-year envelope structure, the matrix. And so it's gone, so it's basically an exhaust. It's gone down here. So it's retraced to the 5-year PL dot. And now normally you'd get congestion up and down. Mm-hmm. But that's, I mean, it's theory. And of course, the problem with 5-year and 1-year charts and so forth is you can be right or you can be wrong, but waiting to find out, you know, you grow gray hair and die in the meantime.
Yes, they're awfully big numbers if you're talking about where to place stops and things like that. So that's where the lower time periods lead the way.
Well, you wouldn't want to put a trade on and leave it for 5 years with a stop just on the 5-year chart. At least I don't think I would.
Yeah.